So, what if I told you that becoming a millionaire isn't really about having some high-paying job or a lucky stock pick or a big inheritance? What if it was just about following a few super simple, repeatable steps? Okay, let's dive right into this.
Welcome to Wealth Forge AI.
Because the data actually shows there's a blueprint that's, well, surprisingly achievable for pretty much everyone. First things first, we've got to get rid of this myth of the flashy millionaire. You know, forget the Lamborghinis and the giant mansions. The biggest study of millionaires ever found that the most common cars they drive are Toyotas and Hondas. Yep, they're not living some crazy, extravagant life. They're pretty much living just like us.
So if they're not who we see in the movies, then who are they really? Let's look at the actual data, not the stereotypes, and meet the real, everyday millionaire.
Okay, so the real story here is all about habits, not some lucky windfall. Studies from both Fidelity and Ramsey Solutions paint this super clear picture. The average 401k millionaire makes less than 150 grand a year. Most didn't inherit their money. They simply stayed at their jobs, steered clear of debt, and just consistently invested, month after month, year after year. It was their habits that made them wealthy, not their income.
So if it's not a giant salary, then what's the secret, right? What's the engine that's powering this whole journey? Well, it's something that's available to every single one of us. And that brings us to literally the most powerful tool in your wealth building toolkit. This is the one concept that does almost all of the heavy lifting for you.
It's called compound interest. And honestly, the simplest way to think about it is this. It's when your money starts making its own money. It's kind of like a tiny snowball at the top of a hill. At first it's small, it's slow, but as it rolls, it picks up more snow, and it gets bigger and faster, all on its own. And this slide right here shows the incredible difference. With simple, straight-line growth, your money adds up, sure, but it's slow. With compounding, though, it accelerates. It goes exponential. That same 500 bucks doesn't just grow, its growth starts to grow, turning a really small amount into a seriously significant one over time. It's not addition, it's multiplication. So what does that actually mean for you? Let's call this the wealth multiplier. Get this. Every single dollar you invest at age 20 has the potential to become $88 by the time you're 65. Just think about that for a second. 88 times its original value just by giving it time to do its thing. And this brings us to an absolutely crucial point. Because compounding needs time to work its magic, your most valuable asset isn't money, it's time. And waiting, well, waiting has a very real, very high cost. Let's just look at the hard numbers. To get to $1 million by age 65, someone starting at 20 only needs to put away about $95 a month. Not bad, right? But what if you wait just 10 years and start at 30? That number nearly triples to $263 a month. And if you wait until you're 40, you're looking at over $750 a month. Same goal, just a drastically different price tag. And this chart just lays the cost of waiting out there for everyone to see. It's kind of brutal. At 25, it's a totally manageable $15 a month. But by 45, it's a staggering $1,250 a month to hit the exact same goal. Every single year you wait, the mountain you have to climb just gets steeper and steeper. You can see how incredibly powerful your money becomes when you just give it time. Now, if you want to learn more simple, actionable ways just like this to build your wealth, go ahead and hit that subscribe button right now. We've got a lot more to share. Okay, so we've covered the why. Now, let's get to the how. Here is the simple 6-step blueprint that's based on what actual millionaires did to build their wealth. All right, this is the core of the whole plan. Let's walk through it. 1, start now. I mean, today. Even a tiny amount is infinitely better than 0. 2, get your employer match. If your job offers a 401k match, that is free money. For the average millionaire, this made up 28% of their final balance. It's huge. 3, invest 15% of your income, consistently. That's the magic number. And automate it so you don't even have to think about it. 4, diversify. We'll talk about that in a sec. 5, stay the course. Markets will go up, they'll go down, ignore the daily noise. This is a marathon, not a sprint. And 6, avoid high interest debt. It's like reverse compounding and it works directly against you. So what does diversify actually look like? Well, for the average 401k millionaire, it's pretty simple. About 3/4 of their money was in stocks or stock funds. You know, things like an S&P 500 index fund, which basically means you're buying a tiny piece of the 500 biggest companies in the US. The other 25% was in more stable stuff, like bonds.
So what's the number one takeaway from all this research? It wasn't some secret crypto coin or a complicated strategy. The single biggest factor that created these millionaires was just consistent investing in their workplace retirement plan, like a 401k, and a personal one, like an IRA. That's it. It's boring, it's simple, and it's incredibly effective.
Okay, now that we have the blueprint, it's just as important to know what can totally derail you. So let's quickly cover the 3 most common traps that stop people from reaching their goal.
Let's break these down. First, high interest debt. Look, trying to invest while you're carrying a 20% credit card balance is like trying to run up a down escalator. You're working really hard, but you are guaranteed to lose ground. Second, waiting for extra money. Here's a little secret for you. It never shows up. There will always be something else to spend money on. It's all about priorities, so just start with whatever you have. And third, panic selling. When the market drops, it's scary. I get it, but that's when great investments go on sale. Historically, it's the best time to be buying, not selling. We've covered a lot: the myths, the math, the actual plan, and the pitfalls. So what do you do with all this? Let's make it real with one final thought. Your journey to $1 million doesn't start when you finally have a lot of money to invest. It doesn't start when you get that next raise. It starts right now. It starts with the very next dollar you decide to invest in your future. So I'm going to leave you with this one question. Forget about the $1 million goal for just a second. What is the one single simple step that you are going to take today to start your journey?
If this explainer was helpful for you, please give it a like. And I really want to know. Comment below what that first step you're going to take. Share this with a friend who needs to see it, and of course, make sure you're subscribed for more simple guides to help you build a better financial future. Thanks for watching.